This is FinTech Futures at FinovateFall, and I'm joined by Amreen Sodhi of ScotiaBank. How are you?
Good. How are you doing, Paul?
I'm very well, thank you. I'm very well. Just to get things started, we'd like to give a quick introduction to yourself and your role then.
Sure. I lead the digital product team for payments and loyalty at ScotiaBank's digital banking team, which is called Scotia Digital. Have had like a decade over experience in financial services, payments and lending. My recent interests have been blockchain, crypto, tokenization, like deep technologies in the payment space.
Excellent, excellent. And you're here speaking on a panel about the future of crypto then. So to set the scene, how would you say banks, particularly in North America, are viewing crypto at the moment? Are they taking it on board?
Yeah, it's a mixed bag. I'd like to believe the progressive banks are exploring it. I won't say embracing it. And I don't think they necessarily need to embrace that either. But I think the focus from the big banks is a lot on the underlying technology and leveraging that for improving, payment experiences, customer pain points. Less so about crypto purely as an investment asset. But I'll say it's still it is a still small minority among North American banks that are doing something in-house. A lot of it is about partnering with third parties in this space, like Ripple, for example, in the cross-border space. A lot of banks are partnering with them. So yeah, it's a mixed bag, but definitely still not the vast majority getting into this.
Okay. So, I mean, going beyond that speculative investment side of things then, can you tell us a little bit more about some of the use cases then for crypto in the banking
Yeah, I think one of the biggest one, Paul, the early starters, and I continue to believe it's a strong one, is cross-border payment space. I do want to go back, like it's the underlying technology of crypto, which is the blockchain technology or distributed ledger technology, which is being leveraged for these use cases, not crypto per se. So cross-border payments is a good one. We've seen some use cases in identity, especially with sovereignty coming to identity space, loyalty as well. There are a lot of loyalty platforms leveraging blockchain. And I think the last one is the classic example of crypto as an asset, which some banks are starting to do.
Excellent, excellent. So how has ScotiaBank then been looking to implement some of these use cases?
So ScotiaBank's scene is also very interesting in the sense that they primarily operate in two key geographic areas in the Americas. One is Canada, where they're headquartered, and then a huge presence, almost 50% of the revenue coming from the LATAM countries for them. And in a couple of the LATAM geographies that ScotiaBank operates in, central bank digital currencies, which don't necessarily always use blockchain, but that's actually been mandated in geographies like Jamaica, Bahamas. So purely from a regulatory and mandate perspective, that's an area that the bank is looking, because we need to update our infrastructure to support those currencies. And then outside that, like I said, other banks, we are exploring both partnership plus in-house, leveraging blockchain to improve operational efficiencies, improve our infrastructure. So those sort of use cases, but much early days on that one.
Excellent, excellent. So what kind of challenges exist when it comes to implementing kind of new payment use cases around this?
Oh, a lot of challenges. I think the one biggest one is actually lack of talent. I think with this whole crypto recent debate, the market's going down, we saw a lot of mass firing from the smaller entities. But then I think banks like us tend to benefit, because that, the market becomes more, more within our appetite. So talent has been a huge, lack of talent has been a huge issue, but working through that. Outside that, the lack of regulations doesn't help either. So, as a regulated entity, if you don't know what's going to happen in a certain space, it's hard to go all in and invest a lot. So those two, I'd say, are the biggest, because really to implement something, when we don't only need like core blockchain engineers, but we also need all the ancillary groups like legal, compliance, everyone sort of having reasonable well-versement with this space, which doesn't exist. So it's really becomes very challenging to figure out solve problems, figure out the way forward. So those, I'll say, would be the two big ones: the lack of expertise and then lack of regulation in the space.
You mentioned it briefly there, obviously going through a little bit of a volatile period in the crypto market at the moment. Has that kind of dampened any sentiment there, or is there still this kind of idea that this is something that's for the future and there's going to be waves?
I won't say from a banking perspective it's dampened much, because to start with it wasn't such a rosy picture. We weren't being so aggressive or whatever. So I think banks are taking a cautious, but I think the correctly so approach in this space. And so I don't think it changed much from a big bank perspective, but definitely as we've all seen in the news, smaller shops, completely crypto focused, not diversified, they have had to suffer a lot of setbacks. So yeah, I think that's. But from a big FI perspective, I don't think it changed much. Like the only, I think I'd say one of the upsides actually has been maybe more talent pool to choose from. So it's not been that bad for the banks. Yeah.
So do you see a point where crypto will be accepted as a kind of a day-to-day payment method?
No, I don't. Not in the near term. Like, who knows the way technology is going in 10 years, I can't talk about that. But next 2 to 5 years, I don't think so. Like there are, I don't know if you heard, you might not have, you been busy in the interviews all day, but there was a talk around, I think the topic was crypto is useless. I won't go in that direction, but I think the idea being crypto in its classic format like Bitcoin, it's structurally not set up to support at point of sale transactions which have to be in real time. Like Bitcoin to Bitcoin settlement takes a minimum of 10 minutes. You won't be standing at a coffee shop waiting to do that for a transaction to go through. The volume of transactions that a Bitcoin network can support is very low compared to what a Visa or MasterCard or the big payment providers can. So like I think just I would not expect crypto to become a common method of payment, pure crypto to crypto payment. The alternative that's picking up is crypto to fiat currency, or the currency that we know today conversion. So at point of sale, you could have a crypto card, but in real time, it's sold by the back end. You get the cash and then you use that for the actual transaction. That's fine. I think that can pick up just like any other loyalty platform or currency. But classic crypto payments, unlikely in the near to medium term, from my perspective.
Excellent. And regulation is often a key talking point around crypto as well. Do you see more of that coming into the space soon?
I think so. So I think we every day are reading about US regulators, Canadian regulators thinking about it. I think their OSFI's already come out to guide the regulated banks that keep us abreast of the exposure you have on crypto assets. So I think regulations have started to come, same on the European and Asian market side. So yeah, I think it's a matter of time they'll come, and I think they'll do good for the industry. An unregulated industry means just like there'll be small and ad hoc players. A regulated space will mean that the big entities who are risk averse can actually start getting into it, more governance to these things, which they should have because they're dealing with people's money.
Excellent. Well, thanks so much for talking with us, Amreen. It's been great seeing you.
It was a breeze. Likewise, thanks, Paul.
No worries. Thank you.